Answered. This is a compilation of the most common questions that I have heard from new investors over the years. Please read these in any order that you wish, or simply use the section as a reference guide. Once you are done with the book, keep it on your nightstand, bookshelf, or coffee table so that you can go back and review any of these chapters as you start to invest. Chapter 1. Why should I care about the stock market? Most people do not care about the stock market. It's not hard to figure out why. The stock market appears to move up and down randomly. It doesn't seem to be linked to what's happening in the real world at all. The media only tends to make a big deal out of the stock market when it crashes, like it did most recently in 2000, 2008, and 2020. The movie industry hasn't helped either. Popular movies like The Big Short, Margin Call, Boiler Room, and The Wolf of Wall Street all make the stock market seem like a big gambling machine. I've heard people say things like, the stock market is rigged. Wall Street rips off Main Street. The stock market is just a playground for the wealthy. That's a shame, because the truth is that the stock market is the greatest wealth creation machine of all time. Let me repeat that. The stock market is the greatest wealth creation machine of all time. The stock market has enabled millions of ordinary people to build wealth and achieve their financial goals. To show how, we'll look at one example of how the stock market can help an average person realize their financial goals. Let's say a fictitious person named Aaron started his career in 1981, which is the same year that 401ks were created. His starting salary was $26,000, which was just under the average family income in the U.S. at the time. Aaron was okay with money, but he wasn't great. He lived paycheck to paycheck, but he always paid off his debt on time. Thankfully, Aaron made one great financial decision. When he started his career, he put $400 per month into his company's 401k. He invested it all in funds that grew at the same rate as the overall United States stock market at the time. Then he completely forgot about his 401k. He didn't even bother to check his statements. After 39 years of working, he finally took a look at his 401k balance. How much money was in Aaron's 401k? $3,013,537. Aaron was shocked and also confused. How had he become a multimillionaire? He did some quick math. His $400 per month only amounted to $191,600. Where did the extra $2.82 million come from? The answer is the greatest wealth creation machine of all time. The stock market. The U.S. stock market grew at a rate of about 11% per year during Aaron's career. When that growth rate was combined with his savings of $400 per month, his investment portfolio got bigger at a faster and faster rate each year, although the growth didn't occur in a straight line. After the first year, Aaron had invested a total of $4,800. However, the stock market didn't move much during the year, so his portfolio was only worth $4,823. By the second year, Aaron had invested a total of $9,600. The stock market was up during this time, so his portfolio value was lifted to $11,383. After 5 years, Aaron had invested a total of $24,000. The stock market went up a lot over those 5 years, which grew his portfolio to $37,594. After a decade, Aaron had invested a total of $48,000. The stock market went up some more, so his portfolio grew to $101,208. That's when things started to get interesting. Since Aaron's portfolio is now worth $101,208 and it was still growing about 11% annually, the gains from his investments were adding more value to his portfolio than his $400 per month contribution. The stock market continued to go up during the 1990s. By the end of his second decade of investing, Aaron's portfolio was worth $696,839. A portfolio is a collection of financial assets that are owned by an investor. The 2000s were a tough period for the stock market. There were two big declines in 2000 and 2008. At the end of Aaron's third decade of investing, his portfolio only grew a little bit and was worth $793,479. However, the stock market's growth rate picked up in the